I'm Gene Goldman, and here's a look at the week ahead for the week of February 27th. Last week, U.S. stocks were down for another week. The S&P 500, which is a big, broad benchmark for U.S. stocks, has now fallen for 3 straight weeks. Stocks fell last week on higher than expected inflation readings and the concerns that the Fed will need to raise rates more than what was expected. Remember, higher rates equals higher borrowing costs, which theoretically slows the overall economy. So let's look at this week. This week is the beginning of March. That means we'll start getting data readings for the February economy. February data readings are important because in January, data was very strong. But we do expect the data in February to pull back a little bit. Because if you go back to January, on January, the data was stronger than expected because we had warm weather throughout the country. Also, there was a lot of post-holiday heavy discounting from retailers. Auto parts shortages improved dramatically. So we see here, for example, a big jump in auto sales. And then overall, because of the warm weather, we just spent less money on heating. We do think a lot of this reverses in the February data. So how do we get these indications? How do we get a good indication of February data? Well, viewers of this video know that one of our favorite economic indicators are the PMIs, the Purchasing Managers Indices. As a reminder, these indices are surveys of purchasing managers all across the country. Above 50 on the index is expansionary, below 50 is contractionary. So Wednesday, we get manufacturing PMI. We do think this will stabilize at a fairly weak level. And I say weak because we saw new orders in the last month's report fall to a very ugly 42.5, as you see here. Friday, we get the services PMI, and we do expect a continued gradual downtrend, which does increase recession worries for overall people as this data continues to slow. All this data, and along with all the data that we have, will be posted on Twitter at CeteraIM, our Twitter handle. But with this week, our overall takeaway, expect February data to reverse the January strength. Also, we do see signs in PMIs in terms of the data slowing. And remember, the PMIs are the first look at the February economy. Also, both PMIs, manufacturing and services, especially new orders, should show some weakness, which is consistent with the negative manufacturing environment and potentially negative GDP growth later this year. In other words, the data is starting to slow. We're watching this very carefully. Thank you for listening. For more information, please follow us on Twitter at CeteraIM, and we will see you next week, and thank you.